So while the crypto market is kind of in a bit of a weird place and we're all just waiting to see what happens for the most part, I had an idea for an experiment that I wanted to do, which is where I would feed everything that's happening in crypto into ChatGPT and kind of just see what it says about everything that's going on. And so I was like, you know what? I thought this would be a pretty interesting video where we ask AI if the crypto crash is over, considering everything that's happening from a technical and a fundamental perspective. And so without further ado, I'm going to go ahead and show you guys what the results were of this conversation that we just had, because I actually would say for the most part, I agree with it a lot. So earlier today, what I did is I was like, okay, first and foremost, we're just going to start off with technical analysis. So I took a screenshot of the hourly time frame of the Bitcoin chart, and I simply just asked ChatGPT, I said, what do you think about this recent price action from Bitcoin? You think the crash is over? And it looks like this. And so what it said was that based on everything that's going on, it looks like a classic higher time frame retest zone. It said that Bitcoin is sitting on a strong prior demand area, which is of course this red box, red zone right here. And as a result of that, the bounce attempts here suggest that there's still buy-side interest, but momentum has weakened after multiple retests. And so what this means is that there's a massive zone of support, this little red zone right here. And right now, Bitcoin's price is trying to build support on top of it. And the fact that we have been able to consistently build support on top of it recently does go to show that there is still buy-side momentum here, but it's definitely weakening the more and more we come back down to it. Every time you touch this support zone, the more likely it is to fall through it. And so obviously that could be a little bit problematic if we keep running into it without actually bouncing off of it. And so the interpretation of that is by saying, okay, well, if Bitcoin's price holds above 108.8K, it would likely form a local higher low and potentially set up another move towards 116 or 120. So if we're here and we're bouncing and we're holding some support here, I think it's well reasonable we could push up towards 116 to 120 up here, like we did right here. But, big but, LOL. If it breaks cleanly below 108.8 with volume, you'll likely see a flush all the way down to $103,000 and $105,000 range, being some of these levels right around here towards this trend line that we've been tracking for quite some time. And so it gave a very clear determination here. Like, listen, while we're above this red zone at $108.8 thousand, we're in a decent spot, right? But if we fall below 108.8, don't be surprised to see a big flush back towards the downside, possibly back as low as $100,000 or even possibly below. Now, in addition to that, based on what we're seeing with the liquidation heat maps, it is noticing that there are a lot of clusters under 110K between $110,000 and $107,000. And you can see that as well. Between 107 and 110 on a 30-day, there's a huge cluster of liquidations. We're talking about $2.5 billion worth right there. And so as a result of that, if you do start to see, of course, Bitcoin's price pulling back to 108, 109, 110, it wouldn't shock, I guess, ChatGPT at all to see some sort of flash move back towards the downside to grab up all of this liquidity that there is before maybe even trying to make a reversal to the upside. And so what it's saying here, just based purely off of technical analysis, is that the crash phase is likely near exhaustion if 108 holds. However, the market hasn't shown its conviction in recovery yet. It is still in a retest and reassess stage. And if you'd had to frame it simply, the crash might be over, but the recovery hasn't started. And it all really comes down to whether or not Bitcoin can hold at $108,000 right here. If it can hold, crash easily could be over. Maybe some sort of reversal back up towards the upside could be on the way. But if 108 does not hold, things easily could get ugly from there. And it could start to break structure to the downside, really capitulating towards some of these lower lows. So it's a very clear thing. It's a very clear thing, of what exactly is happening right here. It all comes down to this battle that's occurring at 108. So it's like, okay, that's the technical side, but we all know, right? Bitcoin is manipulated and it is being kind of like moved around by a lot more than the technicals. So it's like, well, let me feed it some understanding of what's happening recently. So I said, let me give some macro context now. The market dumped on Friday as a result of Trump threatening a 100% tariff on China. Of course, the weekend was quiet until Sunday, which is when Trump said everything was fine with China, which of course pumped the market. I said dump the market here, but I meant pump the market, but it knew. Monday, 2 days ago, we started to see things heat up again, leading up to Jerome Powell's speech. Tuesday, in Jerome Powell's speech, he said the economy was in the same place that it was in September, implying that rate cuts will continue going forward. And then Tuesday, Trump also then came back in and said that China was being malicious with our soybeans, and we may not work with them anymore on cooking oils. God bless America. And then last but not least, I was like, okay, taking all that into consideration, does that change your opinion? And it said, yeah, the context changes things a lot. It said, from the big picture, the macro plus TA fusion, we're clearly in a news-driven, politically charged market right now, meaning that TA is still useful, but technical zones are being amplified or invalidated faster than normal because macro catalysts are driving liquidity. And that's something that I've been talking to you all a lot about recently. I said, listen, like, do your TA. Understand that technical analysis is important, but your TA can get invalidated or validated much faster and much more violently as a result of what we're seeing in the news, right? And that's something that I would heavily agree with. Now, based on the Trump and China narrative, it is creating a whiplash cycle, right? The second that there's good news, it's up. The bad news, it's down. And it's really starting to take that into consideration when determining its determination of does it think that this crash is going to be over. Now, when you mix in the fact that Powell's comments come with a hidden tailwind, it's actually a pretty decent thing because it said historically, once the Fed reconfirms that rate cuts are coming and inflation isn't reaccelerating, risk assets such as the Bitcoin, NASDAQ, whatever, tend to bottom within 5 to 10 trading days. So, in its opinion, since Jerome Powell came out yesterday and said that the market's still in the same place it was in September and we're not worried about some sort of reacceleration or anything of that nature, we could easily within the next 5 to 10 trading days see the market bottom and actually see some sort of growth. And so that's actually a good sign. So it's like, okay, well, we're getting some violent volatility from the Trump situation, but we all know that this doesn't last very long. But we are seeing some pretty solid tailwinds possibly inbound from the actual comments that we got from the Fed. So it's like, maybe this could increase its confidence that we do see this thing hold and that the crash is over. And so when you mix all of this in with the technical structures, it says the technical structure is still holding, but the confidence is shaking. So even with the macro turbulence, Bitcoin also hasn't technically lost its structure yet. It's still holding above 108, it's still above the ascending trend line, and it's still printing higher lows on the 4-hour daily candles. And that tells us that it isn't a full-on trend reversal yet. It's more likely a mid-cycle shakeout triggered by macro fear manipulation. Just flat out said that. It doesn't think that the bear market is starting. It's more likely that it's a mid-cycle shakeout triggered by macro fear manipulation. And that is something that I've been saying consistently. That is something I can absolutely agree with because when you look at this from a more macro structural perspective, I'm not seeing that yet. I'm not seeing 100% determination that the bull market is over. What is happening right now is we broke up, of course, in 2024. We came up, we put in that all-time high, we came back down, we back tested resistance, we used that to break up, we came back down, we're now trying to back test this resistance, and we easily could see this market try to continue back upwards under the right circumstances. And so as of right now, there are no confirmations. There is nothing that says for sure that this bull market is over and that this crash has to continue. There could just be more shakeouts towards the downside to liquidate more and more people in the process. And so what it actually did is it gave actually a scenario map over the next 5 to 10 days, which I thought was interesting, saying that it thinks that a relief rally or recovery is a 60% probability with the breakout target up towards $116,000 to $120,000. Choppy reaccumulation, just kind of bouncing back and forth with more political action and news, is about a 25%, ranging between here and 118K. And then a breakdown continuation where it breaks through 108 and continues lower to say 103,000, only a 15% chance. Now, I'm not going to lie. Personally, I do think that that's too low. I think it's much more like a 25% chance that Bitcoin does break down to those lower levels because there is liquidity there. I think 25 to even 40% chance is well reasonable that Bitcoin goes one more time back to say 107 point something thousand, smashes these investors out, and maybe then tries a rally from there. So I do think a breakdown easily could happen much easier than 15%. But all in all, I am in general agreement with the idea that some sort of relief from here, even if there is just one more wick, boom, boom, I think it's over 50% possibility or probability? Possibility, right? And so with that in mind, I thought this was interesting. And so what it says is what it would watch is the 108K zone, which of course is that macro zone of support that we've been watching very, very closely for the next couple of days. And all in all, it just needs to watch the headlines. Any de-escalation with the US-China rhetoric or confirmation of rate cuts will immediately support risk on assets. Maybe not pump them, but give them the support that they need to maybe get a pump. And so all in all, it says that it thinks that the general crash phase is over, but the volatility phase isn't. There could easily be a little bit more volatility and shakeouts, but all in all, it does think some sort of relief could be on the way. So that's its opinion. I thought that was pretty interesting, combining in the technicals with the fundamentals and getting a general understanding of what it thinks based off of its assumptions, off of headlines and technical structures and price action and much more. So I don't know how much you guys are going to find this valuable, but I thought it was cool. Again, we're just kind of just waiting to see what the market does right now. So I wanted to get another opinion, and who better than the thing that knows everything about everything, right? So that's kind of the video for today. Let me know in the comment section if you guys agree. Do you think that the crash is over? Do you think that we should be watching that support zone that closely? And do you think the odds of us breaking down are, what are the percentage chances that you guys think is going to happen? Let's talk down below about what you think is going to happen and if you agree with its thesis. But all in all, I hope you guys did like this kind of bit of a different video. If you did, guys, one thing that I will remind you is that I do post every single day over on my Instagram page as well, where I talk about the news, the price action, the headlines, and much more. And you can also see some personal stuff about me as well if that's interesting to you. So feel free to go check that out down below. I do have a link to BTCC down below as well if you are trading, but please be very careful. This is one of the most dangerous markets in history to be trading in, but you can check it out and get some real good bonuses there. And all in all, I'll see you all in the next one. Peace out, everybody.